What did you make of the report?
I think the important bogey that people were looking for was $30 in EPS on the guide, and they're going to give us a dollar better than that. So beyond that, everything looked good, Romain. Pricing was up 60-70% for DRAM and NAND respectively. I think that's a little bit below what I thought it might have been, but also in a world where people are concerned that pricing's moving too much too fast, with them able to deliver the results without pricing moving more than that, I think that's actually ends up being a good thing.
I am curious when we talk about this idea of sort of how they keep this going. I mean, traditionally, you've covered the stock, traditionally these were always kind of cyclical names. And there's been this idea of this memory fortress that you've talked about, this idea that we've kind of broken that cyclicality, certainly in this AI build out. Do you get a sense here of just how much further this can go from a time perspective? Is this something that investors can sort of have some confidence in, that the growth story, no matter what it is, will be there for more than just another cycle?
I think at the end of the day, these stocks will still be cyclical. You just can't get away from the fact that when you bring on capacity, you bring it on in large chunks, and at some point you have too much capacity. Having said that, so Micron, in their prepared remarks, talks about when some of their new fabs are coming online, and it's late 27. So that production really fully hits in 2028. Up until that point, I mean, they're talking about their expectations for DRAM bit growth being above what they previously anticipated, but it's by a couple percent. And I think that's the struggle here, is there is so much demand, yet without these new clean rooms, you can only increase capacity by a little bit. And as long as that's the case and there's this much demand, you just see pricing margins remain really, really healthy.
Yeah, and I do wonder, you think about sort of the medium term, long term. Obviously, right now, it seems like Micron and its peers are the biggest beneficiary of this bottleneck that we're seeing when it comes to memory. But, you have to think that, some of the companies that are ponying up a lot of money, spending a lot of money on memory right now, are very much looking for answers on to how to mitigate those costs. And I do wonder, how you sort of think about those longer term risks.
Yeah, I mean, I think that the way that the memory vendors are trying to at least somewhat moderate that risk through the intermediate term is these longer term contracts. And my belief is that a lot of the large customers have signed 3-year, 4-year, 5-year contracts, and that the memory vendors have been willing to give up a bit of future pricing potential in order to make certain that they do have a bit of an elongated cycle. I think that's it kind of ends up working for both parties, even if customers aren't happy that they're paying 4x, 5x what they were paying for memory just 6 to 9 months ago.
And so we got the numbers at the top of the hour, beat and raise across many different metrics. We're counting down to that earnings call for Micron. And Matt, what will you especially be listening for in light of some of these numbers?
I think that they gave you a lot of it in their prepared remarks. So Sanjay is going to talk about the fact that over 50% of total demand is coming from data centers. I mean, that tells you how much of this demand is being driven by AI. They told you on CapEx, the CapEx is going to go up significantly next year. In particular, construction costs will be up by $10 billion. I'd love to hear a bit more about kind of how much capacity that can bring on, if they offer any granularity, and then exactly how much more equipment spend there'll be, because it both impacts the equipment makers, but also gives us some idea around how quickly some of this capacity might come on.